the jury's out on how the Fed moves from here on, because some are saying the banking crisis is a call for the Fed to slow down or even stop. Others saying no, they're really focused on inflation and they will not let the banking crisis deter them. What do you expect to see from the Fed over the next few weeks and months?
Well, you must remember the mandate of the Fed is to crush inflation. And they have a target of 2%. And as you know, the inflation rate now in America is something like 5%. So they've got a long way to go. And they believe in order to crush this inflation and bring it down to 2%, they believe that they have to raise interest rates. So I think you will see a continuously higher rate of interest coming out of the Fed decisions. Of course, a lot of that will probably be delayed until the election. As you know, the Fed is a political organization, and they will want to make sure they don't kill the Democratic goose that lays the golden egg. So they may want to hesitate before they raise rates too much, but still the objective is the same. 2% is the number, and that's where they're going.
So, do you expect them to raise rates a number of times from here on, or would it rather be a case of them raising a little bit more, but then actually holding rates for maybe another 9 to 12 months at that elevated level? So there is no great Fed pivot, as they call it, happening anytime soon.
Yeah, it will be a lot slower, and they've already signaled that. They will be much more cautious. They'll do it more slowly, maybe 0.25% here, 0.25% there. And they will be watching carefully to see if the inflation rate is coming down. But at the end of the day, those rates will continue to go up unless inflation comes down.
And you think equities can climb in a situation or a backdrop like that, where interest rates remain that elevated, say 5-6%? You think companies, banks, etc., corporations can handle that?
History shows us that high interest rates do not kill the stock market. There are many, many cases, if you go back, when interest rates were high and the stock market was doing very well. So I would not say that there's a direct correlation between high interest rates and a bad stock market. In fact, maybe the opposite.
And where does all this leave gold? Because gold has been on a bit of a tear. It's been one of the best performing assets, now above $2,000. Does this continue to outperform most asset classes, you think?
Yeah, I think gold, I've been recommending gold for quite some time as a safety hedge. And I think they're going to continue to do well, but there'll be corrections along the way. So, it's maybe a good idea when gold goes up like this, take a little money off the table, but keep that 10% in gold. That makes a lot of sense.
If you like the video, do like, comment, share and subscribe.